Today also we are going to discuss another important question in consolidation, that is 2022 July paper. For the consolidation on 1st January 2022, Malta PLC acquired 75% of equity shares of the Paradise PLC for 450 million, when Paradise retained earnings were 105 million. Malta paid the 300 million immediately in cash and agreed to pay balance amount in after 2 years for the date of acquisition. After the date of acquisition, within next 2 years, they pay. This is a deferred consideration. On 1st July 2021, Malta bought 25% of the equity shares of the PEG for the 275 million. The PEG returns earnings were 200 million. It's given. So the M and P relationship, it is a parent and subsidiary. M and P relationship is the PEG relationship, is the investment in associate, because just 25%. Right. So we are not going to discuss the consolidated statement of income, right? So here they are asking, prepare the consolidated financial position as at 31st March 2022. This is a mid-year acquisition. We have only 3 months. January 1st acquired, January, February, March. Only 3 months we can recognize all the things, profits, entire things, right? Now first adjustment. So the as at 1st January 2022, fair value of the remaining 25%, in the sense the NCI is 90 million. The fair value of the NCI is 90 million. So here you can see the fair value of the NCI. $90 million here. Right. The cash consideration 300,000, it's directly given 300,000. Remaining 150 million, we want to discount, right, to get the present value. 1,50,150. Discounting factor is 10% as the discounting factor. 1,50,000 divided by 1 plus 10% into the power 2. Deferred consideration. Let me check. 1,50,000 divided by 1 plus 0.1 to the power 2, you will end up with 123,967 approximately. Here, the purchase consideration plus the NCI value is this much. So in order to calculate the goodwill, you compare investment against fair value of the net asset at the date of acquisition. Here it's mentioned the no change in the stated capital. So we can directly get the stated capital of the subsidiary. Shared capital 400,000. The retained earnings, it's mentioned that the retained earnings of the acquisition date is 105 million. We can do that, right? Afterwards, it's mentioned there is any general reserves. The fair value of the building was greater than 10 million. We want to add 10 million here. The fair value increase in the building 10 million, right? In other words, the fair value exists in the 5 million of the inventory. Inventory is 5 million. And the contingent liability also 30 million. You want to minus because it is decreasing the net assets. After that, you will compare these two and ended up with a goodwill of 23,967 rupees, right? The revenue of Malta includes goods sold to the Paradise in February 2022, amounting to 10 million. Margin is 10% if it is a margin based on the selling price, right? 50% goods are there remaining. It means unrealized profit also. How to find the unrealized profit? 10 million into 10% into 0.5. 15 කියන්නේ ලක්ෂ 5ක් තමයි unrealized profit එක. We can recognize, right? Such unrealized profit we can recognize. The URP here, unrealized profit 10 million into 10%. If it is a margin based on the selling price, you can get the profit. Out of that, 50% are sold to the outsiders. It means the unrealized profit is 500,000, right? In this adjustment, right? Malta includes sold to the Paradise. Malta includes in the sense Malta is our parent and the Paradise. It means the who recognize the profit? Malta, right? The consolidated return earnings debit and the inventory should be credited, right? Inventory should be credited. Inventory 500කින් අඩු වෙන්න ඕනේ. Inventory in here, inventories in here URP, and the consolidated return earnings should be minus. It means debited, right? Here you can see it. It's missing here. It need to be added there, right? URP. Only one adjustment is there showing, no? Right. As at 31st March 2022, goodwill impaired by 50%. Previously, we calculate the goodwill. Calculate the goodwill 23,967 or something. 23,967ක් වගේ. Yes. 23,967ට 50% කියන්නේ 23,967න් භාගයක්. It means 11,984යි 983යි මේක බෙදන්න ඕනේ NCI plus parent, right? 11,983න් 75ක් 8,987ක් 8,987ක් යනවා අපි ගත්තොත් ඉන්කම් ස්ටේට්මන්ට් එකේ හොඳට පේන්නනවා 8,987ක් මේ 8,988ක්, right? Approximately. And the remaining goes to the NCI. NCI. Do note that we debiting to the retained earnings. 11,983ක්. මෙති ඒකත් බෙදලා දාන්න ඕන. අපි එකපාර retained earnings වලට බැර කරන්න බෑ. පාර කරන්න බෑ. Retained earnings, the parent portion, this is the NCI, the minority shareholders portion. Right? Right. Done. Paradise sent a payment of 5 million to Malta on the reporting date. However, it does not received by Malta. It means cash in transit, right? Paradise sent a payment 5 million to the Malta. Paradise is who? A subsidiary sent to the Malta 5 million. It means there is any receivable from receivable intercompany balances should be derecognized, right? It means payable to Malta. This is payable to Malta, no? This is a liability. Liability debit and the receivable credit 80,000, 5,000 debited to the where? Cash in transit, right? Sorry, crediting. In here, it mentioned that Paradise set a payment of 5 million to the Malta reporting date. However, it not to be recognized. So intercompany balances should be derecognized. That payable to Malta, it's a liability, should be debited. Debit 75,000. Here, receivable from Paradise credit 80,000. Remaining 5,000 should be debited to the where? The cash in transit 5,000, right? I'm correct previously. Cash in transit. Yes. Ignore taxation. Here we do that. All are done. All are done, right? Easy. This is right. NCI post acquisition profit, it also done. Unequal intercompany balances. I told you payable, debit, cash, debit, and the receivable from Paradise, it is a asset account. In order to decrease that, we want to credit, right? Right. Then now we want to pay attention to the equity accounting of the PEG. So the in cost is how much? 275 million. ලක්ෂ 75,000යි, but we acquiring 1st July 7 වෙනි මාසේ 7 8 9 10 11 12 1 2 3 මාස 9ක තමයි we can recognize, right? Retained earnings is 2 million. mean then retained earning කීයද? Retained earnings 2,34,900යි. 2,34,900යි. ඒකෙන් post sorry at the acquisition date ලක්ෂ 2ක් තිබ්බා. එතකොට මේකෙන් අපි මාස 9යි recognize කරගන්න පුළුවන්. අවුරුද්දට එනවා 34,900ක්. ඒකේ මාස අවුරුද්දට බට්න මාස 9යි. ඒකෙම 100ට අපිට 25යි අයිතිනේ. 25 6,376ක් අපිට අයිති. 6,300 not sorry. මේ මං කිව්වේ අපි මෙතන 12න් 9යි recognize කරගන්නේ. මොකද මාස 9යි 12න් 9යි into 125යි. profit එක කීයද? මේ 12න් 9යි into 125යි. අපිට දැන් at the acquisition date when the PEG retained earnings is 200 million. PEG. මෙතන profit for the year 45,345යි. 45,345 බෙදීම 12න් 9නේ. 45,345යි. 45,345යි profit එක අපිට දීලා තියෙනවනේ year එකට PEG ගේ. profit එකෙන් අපිට මේ අවුරුද්දටම 12 9ක් බලනවා. ඒකුත් අපිට අයිති 125යි. right? එතකොට 8,502යි. ඒක investment එකට එකතු කරන්න ඕනේ. 8,502යි. equity accounting is applicable. ඉතින් 8,502යි. initial investment එක 2,75,000යි. මෙතන investment in PEG 2,75,000යි. 8,502යි. අවසානයේ 2,83,502යි. right. දැන් ඊට පස්සේ අපි අර inventory වල දැන් මෙතන අපි depreciation value වෙත් නැහැ. The fair value of the building greater than 10 million, remaining useful life is 20 years. It means 10 divided by 20 for the entire year, it's giving into 12 into 3. The depreciation is 1,25,000යි. The building depreciation 125යි මේ තියෙන්නේ. The building එක credit කරන්න ඕනේ. සහ retained earnings වලින් 1,25,000ක් අඩු වෙන්නත් ඕනේ. අපි දැන් මෙතන පෙන්නලා නැහැ. Retained earnings subsidiary retained earnings because the land is belongs to subsidiary. then 1,25,000යි. property plant and equipment working number 2 1,25,000යි. ඒක අපි මේ ප්‍රියදමක් විදිහට දාන administration expense වලින්. right? right එක බෙදන්න ඕනේ. parent අයිති portion එකයි NCIT. ඊට වඩා හොඳ අපි ලේසි මේක subsidiary return කියලා T account එකක් ගැහුවා. ඒකේ ඔක්කොම හර කරා අදාළ වියදම් ටික. ඊට පස්සේ ඉතුරු වෙන ශේෂය අපි බෙදනවා NCI plus parent, right? okay. ඊට පස්සේ අපි දැන් ඒ adjustment එක හරි that inventory අපි හිතන මේක inventory සාමාන්‍යයෙන් inventory was sold outside to the group. It means now it's the profit fair value is realize the fair value gain. Outsiders ට අපි විකුණන්නේ fair value gain on subsequent realized. As the inventory had been sold in the reported date, it must be transferred from inventory to cost of sale in the statement of profit or loss. The subsidiary company has already made the adjustment based on their carrying amount of the inventory. Now inventory should be credited how much? 10 million. No, 5 million, right? Yeah, fair value Working number 3, 5 million, right? Inventory should be credited, debited to where? The cost of sale. Debited to the revenue, right? Right. It also subsidiary return should be debited. That is the simple things. As a revision only, I'm doing these things. Right. Done. Okay, now it's over. Thank you.